All right, here we go. Welcome, guys, live. Here we are again. It is Monday, April 19th, 2021. And got the room all set up. Just going to hang out for a sec and make sure everybody's coming in. Glad to have you guys popping into the room with me again today. We got a lot to cover here in the next hour. I want to discuss the overall markets. I got Bitcoin on the screen right now. Woo! It was going to happen. It was bound to happen that Bitcoin was going to make a move back. We'll get into that. I got, so much to talk about today. Let's move this over. I saw a news article that Jim Cramer sold a bunch of his Bitcoin to pay for his mortgage. So many questions come up to mind when I see that. I mean, I know what he's trying to do here. He's trying to justify something that almost seems in his mind kind of fake, that he's going to take some fake money and turn it into real money and pay off a mortgage. Great idea. Great idea. I'm looking at eventually selling some of my Bitcoin off because I've done so well with it. It would be stupid not to take a profit. And I have a number in mind where I want to get out. But this isn't it, all right? So I still see a good bit of more move to the upside. And so still a lot more to come as we move into the future. So I want to talk about Bitcoin. I want to talk about the stock market. I want to go over Fang. And I want to do a deep dive back into Fibonacci. We've done this before, but with the bounce, especially the bounce in crypto, we need to get an idea. I need to get a handle on where these potential bounces could be, where potential buying opportunities could be in Bitcoin and other altcoins. So that's what I want to look at. And don't be surprised if you see some sticker shock on some of these moves, because this could be a move, for instance, where 51,000, somewhere around 51,000 looks like a support point, but then there's another support point below that, and so we see a lot of that, those potential support points coming in play. So do me a favor, everybody, if you're just coming on right now, let me know you can see me and hear me coming in live. Would love to hear from you. Just give me a quick shout on the chat box. Let me know if you can see me. Where are you coming from? I'm going to also do a session here as well where we're going to go in and we're going to discuss your stocks. What are your favorite stocks that you want to look at? Because I'm going to do a session called Double Finder, where we're going to go out there and find doubles in the stock market. All right, so that's a session I'm going to do toward the end of the stream, and I'm going to give as many of you as possible an opportunity to tell me what it is that you want to see on the double. So I'm going to show you my charts, and then I'm going to let you come in and tell me what you want to see. All right, so it's an area I call Double Finder. We'll get to it. All right, so let's go ahead and officially begin. And I wanted to start off with what I always start off with. This right here is what pushes the viewership down. But I swear I'm only going to do it. I'm going to show this for 30 seconds and then we're off of it. Disclaimer, you see. So if you get this on recording, which the recording will be out later this afternoon, just pause this if you want to read it. I'm going to mention two quick things. Number one, stock options and crypto trading have large potential rewards, but also large potential risk. And number two, I'm not an investment advisor. I'm here to show you how it is that I spot opportunities and how I trade myself using alternatives other than simply buying and holding stock. All right. That being said, here's what we want to cover today over the course of this live stream. I'm going to go back through market news. I'm going to talk about fib charts. I'm going to talk about what we see happening in the markets as well. We're going to look at something I like to call SBCCC, all right? And that stands for stocks, bonds, currencies, commodities, cryptocurrencies. We're going to go through Fang as well. Some of Fang's getting a little rocked. We got earnings coming out on Fang stocks, and social media stocks actually start this week. I believe Twitter and Snap are two stocks that are on the list to be talked about for earnings. And we'll take a look at an earnings piece in here too. All right, when we get into earnings, I'm going to add earnings in here as well so that we can see what I think are the big names coming up and what we need to see happening there as well. All right, so I see a lot of you chatting on here. Awesome, you can hear me, you can see me. Thank you very much for the comments. And guys, if you want to thank me, do me a favor. Like this broadcast, all right? Hit that like button, smash that sucker so that this goes out and it helps support the channel and goes out to other folks who do not know how to create alternative investments in the marketplace. So again, I'm going to divide this up in some market outlook. We're going to look at the crypto outlook, and then we're going to go in and we're going to do something called Double Finder, which is a portion of my tools on Tom's Option Tools website. By the way, if you're new to Tom's Option Tools, all right, let me give this shameless plug right now. Down below this video, all right, in the description section, there is a link for a 2-week free trial if you've never tried us before, all right? And so check that out, and that will do everything I'm going to be doing here today, plus a lot more. All right, so let's get to the cryptos, Michael says. Hang on. Let's get to the news. And, if you take a look at, there's a lot of different places we can go for news. If we were to type in this week's news, that's going to take us to all kinds of stuff going on. But I'm going to use Google News, and what I want to do is I just want to show you how this looks. So I'm just going to slide this over, and I'm going to put it right there. All right, let's just stick it right there. This week's news, these are top stories. Netflix, Snap got earnings this week. All right, we know that. Gas prices, and then we've got playoffs, and we've got breaking news. And, the things I want to talk about, too, is, not so much what's going on with mainstream, but we entered in with a little bit of nervousness in the market that the SPY is getting very toppy right now as we head into earnings. How good do earnings need to be to move forward? That's something that, that's being discussed too. And of course, we had the latest news in the cryptocurrency market. So if you did this already and typed in, why did Bitcoin drop? How about why did Bitcoin drop today? Here we go. As much as 15% after hitting a record high. Coinbase hangover, that's part of the conversation. But there's also a piece of news out there that if you look real close, you'll see that the government, right, our department, certain departments in government are also starting to investigate illicit activity using cryptocurrency, and that's pushed this down because Janet Yellen's not a favor of cryptocurrency, but it's still very, very small. I mean, I had some notes here that I wanted to make sure, absolutely sure I talked about. I'm gonna load those up right now so that I can make sure that I cover these because there's some positives on crypto. This is just kind of taking off the froth right now that's happened in the last couple weeks. We'll get to them and we'll take a look at buy zones that we see here real soon. But first, let's go ahead and jump to some stock charts. So what I'm going to do for this particular live stream is we're going to go in and I am going to share with everybody. And let me see, I'm missing something. I'm going to grab, I got a little, in my launch pad, I got something in here called Pinpoint. I want to use that because that's going to bring up the mouse, the big mouse. And so I want to make sure that you see exactly where I'm pointing at. I will zoom these charts as big as possible because nothing pains me more than to watch a live stream, somebody's live stream, and you can't even see what's going on their computer. All right, now I'm going to try to assume that some of you are looking at this on a smartphone or smart device, so I will be blowing these up quite a bit. So when we look at the S&P 500 and we see SPY, and you see the high that's occurred here recently of 417.30, all right, I want to get an idea is if the market pulls back, where are we pulling back to? All right, so if you notice here, I've got a couple of different retracements. The first retracement is the 38% retracement, and that would pull us down to 382.69. I'm only going to go to 50% deep on the ones that haven't happened yet. So if the markets start to pull back And by the way, this week, if you look at history, last 10 years, this week still looks good for the market. We get into the end of April, we start getting into May, that's when history has shown us the pullbacks most likely happen, about halfway through earnings season. And so right now I would say that the 38%, really I don't think that's on the table for the S&P for the stock market, or the 50%, which pushes the SPY back to 372. If you take a look what's going on with SPY, I mean, Friday we hit all-time highs. We got a little pullback today. Nothing big. Nothing like what we saw a couple months ago where we saw these big moves down. I mean, that was a 5-point move right there in the S&P. 10-point move in the S&P. We would need 1, 2, 3 10-point moves in a row to get near the 38% retracement. So, of all probabilities, I don't think it's going to be happening this week. All right, so that's SPY. That's the buy zones again, 382.69, 372, if you were looking at fib retracement levels. Moving forward, now let's go ahead and take a look, and I've got my stock list geared up with a lot of things here. This is the bond market. Now, the bond market over the last 120 days, we've seen a move from 161.51 all the way down to these lows that occurred down here at 130. This is 133.92. Now, we're looking at the drop, and we're looking at a rise off the drop. So if the rise off the drop happens, then it's confirming the stock market wants to pull back. Now, we did see, and let's zoom in there and look. We saw this bounce off 133.92. We had a pullback. We did not breach the lows, and we actually made higher highs. And last Thursday, we hit some really nice highs over here that got us to around the high 130s. Now, we've pulled back, and where are we at today? All right, so we're at 139.11 as of this chart. So this is what, if we're looking at 139.11, we're pretty close to 140. In that case, where do we go from here? All right. If we continue to move higher and we come up to near this 38% retracement level at 144.46, this tells me that we very well likely could see a pullback in the stock market. Because, again, the bond market and the stock market typically move opposite of each other as money flows out of one instrument into another. Money looks like it has been trying to flow out of equities and into bonds as safety. But in the last 2 days, we've kind of peeled that off a bit. That's why we saw the all-time highs on Friday. That's why we haven't seen a big pullback today. The pullback's really centered around a few stocks. All right, so that's the Treasury market. Let's move on to cash. Cash, this is not something that I typically want to trade. It's something I look at to see what's going on with the rest of the market. 25.40 high, 24.10 low. Bounce back up to above 25, and look what's happened here just in the last 2 weeks. We've seen the cash market start to drop, and now you see these 38, 50, 62% retracements, but where are they? Well, they start off the bottom. So the trend went from up to down, so we have a downtrend. So we hit 38%. We hit 50, we hit 68%. So when you look at the fib levels in the US dollar in UUP, throw it out. It's violated everything. It's moving all over the place here. So again, I merely look at this to get a flow of what cash is doing. All right, let's move on to something that's a little more useful, and that would be USO. Now, I mentioned this in our last few live trades, that we saw USO make a pretty sizable drop. And I mentioned that, and I mentioned this in live trade. I mentioned this on podcasts, that dirty oil and energy were going to make a comeback, were likely make a comeback. And I put that, I made that, not only throwing that out there, but financially too. All right, I made a financial backing to what I was talking about. And so we have seen, in this case, USO in the last week make a move off of 40, which we thought was a very good support level, a round number support, and now here we are back at 43.20. So we're up a good 7.5% off of that 40 level. Gas prices, again, we saw news that gas prices really didn't make a big move last week. because they didn't make a big move down. See, when oil moves down, gas prices, they tend to be real slow moving that number lower. But when oil moves up, you watch them. It's like real time how fast they flip the gas prices up. Since gas prices didn't move down a whole lot with the moves that we saw coming off of 44.60, then gas prices are little to unchanged going forward. All right, John coming in from Ecuador. Awesome. And I see all you guys. I appreciate you coming in. Sib's coming in from Tampa. I see Dale, and I see Catherine's in from Arizona. Juanita from Minnesota. Glad to see everybody popping in. The Villages. Charlotte, I didn't know you lived in the Villages. Awesome. Probably one of the, is that the second or third most popular, what do they call it? They call them managed communities. I think it's one of the top managed communities in the country. And was, I believe it was one of the first. I believe it was the second ever. Anyway, glad to see you guys all clicking in here for me. I appreciate it. All right, let's move on. So we're looking at gold, or we're looking at oil. Let's go ahead and move to gold. Now, I saw a news report that came out in the last couple of weeks where, you always got to wonder when you get a healthy dose of gurus out there saying crypto's it, gold is out, gold is no longer in favor. That's when I want to tend to start going in and looking at gold. You guys all know my position on gold. If you've been watching these live streams for a while, I said, and I quote, I'm not a bullish trader in gold. I'm a bullish owner of gold. All right. And I looked at gold actually moving on the downtrend, and we've seen it down, and now we're seeing it going up to the 38.2% retracement level. So there could be some resistance here getting above that. But I love gold long term, especially since so many people hate it. Again, this is not a business where we all, as a collective universe of investors and traders, we all can't make money in certain markets. Some win and some lose. And part of that is to look at the sentiment long term. And if gold seems to be out of favor with most people, then I look at it and say, wow, okay, the risks of owning gold aren't as bad as they're not as great as they were when gold was at $1,900 an ounce or $2,000 an ounce. When gold came down into the 1700s and was trading below 1,700 an ounce, the risks of it going lower, vastly lower, were much less than they were $300 an ounce ago. So that's why I look at GLD, and it's interesting how all that bearishness came out really just off the bottoms. And so keep that in mind. Where do we go from here? We'll test that level, that 167 level. We might even test 170. And obviously, what happens with the test determines whether or not we jump back up and get some more resilience, or whether we pull back down. All right. So that's GLD. Let's take a look and see what's going on in the Fang stocks, most popular stocks out there: Facebook, Apple, Amazon, Netflix, Google, and we'll add Tesla with a T to the end of that as well. Then we'll rotate into cryptocurrency. So Facebook, earnings are coming out in 9 days. You can see what Facebook's done recently. Since its last earnings report, we saw Facebook drop, but it didn't drop down to its lows prior to earnings, and the lows for the year down here at 245.64. We, about 2 weeks ago, came off of new highs at $315. We dropped back in, and we're sitting right now down on some weekly support. Down here around the low threes, 303.14 is where we are right now. Now, earnings are due out next week, not this week. So they're due out. The estimation is they're going to be out after the bell on April 28th. But if you take a look here, we've got a pullback area where if Facebook pulls back, now there's some areas Facebook has to hold. $300 is a round number support. From there, 287.32. That's the 38% retracement that we see looking at Facebook. 50% retracement is at 279.37. And that's off the uptrend that started back there in January, 245.64 to the highs, 315 before pulling back. All right, so there's where we are. We are, believe it or not, almost halfway. You might look and say, well, gosh, that's still a long way down, Tom, to the 287 level. Well, we're closing in on the halfway mark before, halfway to that retracement. So that is Facebook. Let's take a look and see what's happening with Apple. So Apple also has earnings. Apple and Facebook release earnings on the same day or very close typically. Apple's earnings come out in 9 days, also a April 28th estimation. Apple's low, you got to go back on this chart. Apple's low actually started back at the beginning of November, down here below 110, 108.77 is the closing low that we're using. We had an uptrend that took us right into the end of January, right at the earnings report. We have not seen the high since Apple's last earnings report. All right, it has not moved above that. Now, since then, what's happened? 143.16 is the closing high that we mapped out here for that uptrend. So what's happened since then? Well, we've dropped below the 38, we dropped below the 50, we dropped below the 61.8. So what do we do with when we get some garbage like this? All right, where Fibonacci does not seem to be cooperating. Okay, you do one of two things. A, you write this off by looking at anything with Fibonacci, which I tend to do. Or B, pick a different time frame. Pick a different time frame. Maybe we got to go back farther. All right, so if we were to look at Apple, and keep in mind, I'm using 120 days on the chart. But what I'm going to do is I'm going to go back up here. I'm going to click on Apple, and let's take this back 200 days. And let's just see if we can pick a new low. Wow, there it is right there. Okay, so if this is the low, taking us back to August when Apple was trading in the 80s, and then you see that August low all the way up to the end of January highs at 143.56. Now let's zoom on this quadrant and you'll see what I'm talking about. Look at what happened here. So we had the pullback that occurred. It took us down very quickly to the near 50% retracement. Then it opened below the 50% retracement. But 117.09 seems to be the 50% retracement, which we held, and we held it on that pullback, and now we've moved higher. So if that's the case, then Apple does look to make a move and trade back up to its highs earlier this year. What you're looking at here is where we are now, back down to 38%, and where we are now back up to the 143 area is a little less than a 1-to-1 risk-to-reward ratio if you were to use those as targets. A target up, exit for a profit, a target down, exit for a stop loss. So that's one of two ways that I know to look at Fibonacci if it doesn't make sense in the realm we look at, which is that 120-day realm. All right, now hang with me here real quick because I'm going to go back to 120 days. I'm going to go back to my stock list, and we're going to bump forward very quickly. All right, back to Apple. And now to Amazon. And this is what Amazon's 120-day chart looks like. What it shows me is just a lot of nothing. It did, look what's happened here though. Amazon has actually created an uptrend right before its earnings, which are due out in 10 days on the 29th. So if I zoom in here, because I can get everything I need to know right here. Right, so Amazon is just off of highs for the year. Look at this number, 3,400. 3,400, round number resistance, Fibonacci. Right off the Fibonacci resistance. So if we take a look at this chart here, we can get some very interesting buying zones. Let me move this over a little so my face isn't in the way. All right, so here's what we have for Amazon. We see a 38% retracement at 3228.84. We see the 50% retracement at 3175.98. We see the 61% retracement at 3123.11. Okay, so what are these good for? First of all, I don't know anybody. Maybe somebody will tell me today. Or is there anybody in this room that trades call options only on Amazon, that goes in there and puts the big money down, plays big money on Amazon buying call options? If you are one of those folks, please let me know in the chat box right now. I would love to know who's spending big time money buying calls. That's like when you walk into Vegas or you walk into any of the Hard Rock casinos. You go right past the middle, you go to the center where the big money is, all right, the high rollers. In the high roller suites, the chairs are bigger, they're like first class. You got more social distancing, even before social distancing was a thing. Wow, I hear nothing. We're getting crickets in this room, and that's okay. And because guess what, guys? I have the money to trade those, and the calls are too expensive for me. All right. Now, and Sib, I wouldn't even do that in my wildest dreams. I wouldn't buy calls. But let me throw another scenario out there. This is something that I do, and I want to see if anyone else does it. Are there any put sellers in this room on Amazon? You sell put options, or maybe you sell out of the money put spreads to collect premium in a situation where Amazon, like this chart that's beside me. Am I pointing the wrong way when I say Amazon like this chart beside me? I probably am. Yeah, I am. It's like the chart over there, that chart. All right. So if you sell puts, let me know if you sell puts in the room on a stock like Amazon, because the puts are quite juicy on a dollar cost, but the margin's quite high. Another alternative is if you're looking at this, you're saying, hey, I really like the premiums in Amazon. I just don't like the margin that comes with it. Maybe selling out of the money credit spreads makes sense. Robert says sells put spreads. Joe, Brian, now we're talking, guys. All right, even covered calls. Great idea there. So I do something called cash secured puts. And what cash secured puts allow me to do is that if in the event I get the stock, I'm going to get it at a lower price because I go out of the money. But I'm willing to take the stock at that price because I believe that's the price I want to do. So that's what I'm looking at with this example. And I'm going to move on. But I thought I'd throw that out there to see what all of you think here on site. Okay, let's move on to the rest of Fang, which is going to take us to really 3 more stocks. And then I'm going to roll into cryptocurrency. And the first one would be Netflix. And we're taking a look at Netflix. And Netflix is also a situation where the low happened in November. The high happened in January. And since then, we've been caught in a range. So again, not going to spend a lot of time on this. What I would do as a Fibonacci trader is I would simply either throw this one away or I'd move to a different time frame. All right? Okay, moving on to our next chart, Google. Now, Google is going to have a nice looking chart here because it's been one of the top stocks and has been for the longest time in the Fang group. And as you can see it here, we started out at that low. Now, trust me on this, behind my face is the low. And the low is just close to that $1,500 level. All right. I'm going to change the legend doc on here and see if I can get that to update for me. And let's update that with Google. Google. All right. Update the legend for Google. All right. So let's go left on the Google on update and see if that helps. All right. Well, in any event, we see here that Google has gone from a low of just above 1,500 to a high of just below 2,300. So you got some really nice Fibonacci, almost round numbers you see here. All right. 38% puts us just below 2,000. 50% puts us right on 1,900. And then right above 1,800 is the 68% retracement level. All right. So if you're looking at this, earnings are in 8 days. I want to show you something on Google. Before we move into, we'll look at Tesla and then we'll back up. I want to show you something on Google. Then we're going to look at cryptocurrency, which a lot of you are thinking about here in terms of what you want to do. All right, so here we go. Let's take a look at Tesla, TSLA. All right. Now let's move on here. So beginning of November. You see Tesla was around the 375 area, 388.04, right? Top line, 883.09. Since then, we've kind of been in about a bit of a knee-jerk reaction here. So again, I would defer to one of two things. Either discount this one, throw it away, not something we want to look at on Fibonacci, or take yourself back, larger time frame, and see if Fibonacci gives you some ideas then. I mean, you could look at this and say, well, you know what? We didn't breach the 61% level. We came close to it, but we didn't breach that. And not only that, but we have higher lows, and now we just bounced off of the 38% retracement level. Potentially, that's an idea. Earnings in 7 days on Tesla, right? So there's your, for those of you that are looking at this, these are some shorter term buy zones. 693.98, that's the most recent bounce. 635.57, 577.15 for our three areas with Fibonacci. All right. Okay, so there we go. Now, let's go from here, and I want to back up a second. So I'm actually going to back up to Google. And this is something that I just want to share with you guys. What can happen between 1 week and the next? Let's take a look at some option chains on Google. And I'm going to look at the options that expire this week first. Actually, I want to look at this week, and I want to look at next week. Let's set that up. 10% above and below the stock price right now. So here you go. Take a look first at the at-the-money calls on Google. I'm going to find them. Just give me a sec here. There they are. So the stock's trading at 22.80. Look at these at-the-money calls. With just 4 days to expiration, the 80s, the 2280s, are mid-priced above $26 per contract. So we're talking about buying these and paying $2,600, $2,660 to buy that call option. Now, typically you might think, all right, well, if I go out 11 days to expiration, then it shouldn't be twice that, because the more I go out, the less I pay in time. You know, you kind of get a bulk rate when you go farther out. But that's not the case when earnings creeps in. So let's just see what happens with earnings. If you see that now I'm in the options that expire 11 days. Let me blow those up. Remember that 2,600? Well, 26 times 2 puts us in the 52 range. But look at this. They're trading for $63 for the 2280s that expire next Friday. The reason why is because of something called implied volatility. The unknown of what Google's going to report in earnings is what's pushing these call options to be so expensive, right? Take a look at the IV. That's going to be in this area. Let me bring myself down. It's the area right here to the left of this green line. So you'll see IV. Okay, IV bid ask, bid mid ask. Now the IV on the 22 or the 26, 2260s for this week, we actually have a lower implied volatility. There they are. The IV is at 39. You know what the IV we were looking at for on the ones that expire next Friday? They're a bit more expensive, right? The reason they're a bit more expensive is, again, because, let me look at those 2280s again. Actually, a little bit, just a bit higher. But again, this is all factoring earnings in. So what's going to happen is, between now and next week, this number right here that my mouse is on is going to go higher. There's going to be more and more. Again, it's going to happen. Mainstream media is going to talk about Google reporting earnings, Google's earnings, and they're going to shove people in to make emotional decisions. Those that think Google's stock is going to go higher are going to buy these calls. Those that think Google's stock is going to go lower are going to buy those puts. All that added pressure on the buy side on both the calls and puts are going to push the time premium higher, push the implied volatilities higher, and make the trade more expensive. All right, so I'm not a big fan of buying and holding through earnings. A lot of you should know that. I like to go in and scalp in when we see events. As the surge comes in, I want to be riding that, and I want to get out before the news event happens. Earnings, a lot of time, is the news event. Sometimes the news event could be something else. A Fed meeting could be a news event. An FDA approval that we're looking at, we actually know when that approval or non-approval is going to happen. That can be a news event too that pushes implied volatilities and pushes volatility as a whole higher. All right, so that's what we're looking at. Okay, now let's move forward and let's get into cryptocurrency. And with cryptocurrency, I probably should start off. Let's start off with a crypto stock that's optionable. One that I'm not a fan of on the long side. I mean, it's you're pressing your luck if you go with it, but I'm going to put it out there, and that is Riot Blockchain, symbol RIOT. Now, Bitcoin is down sizably today, so what do you think's going on with Riot? So Riot in the last week has gone from 60 down to around 40. So Riot has shaved off 33% of its stock price just in the last 4 days. All right, this is 60, 55, 50, 45, 40. So when you see this big move, you might go, well, wait a minute, Tom. Bitcoin's down a lot. Bitcoin's down a lot today. Yes, but Riot's been showing signs of being overblown for some time. So if you look at where Bitcoin has been in the last 4 days, and you look at where Riot's been in the last 4 days, so Bitcoin's off 15%, Riot's off twice as much. There's a lot of alpha in here. A lot of alpha in Riot. There are other alternatives out there to Bitcoin other than going out and buying Riot Blockchain or buying call options on Riot Blockchain, because it has too much built into it right now in terms of this additional, I don't know what you want to call it, extrinsic value, all right, additional pent-up demand, and that's all coming off now. But let's go ahead and take a look at what's going on with Bitcoin. So, when I look at Bitcoin, first, the price of Bitcoin right now, it's jumping all over the place. So if we were to go back and look at what's happened in the last week, because that really shows the spike that occurred. And you can see here with Bitcoin, and I'm going to blow this chart up so everybody can see what's gone on with it. Really just, here we are. So if you go back, you can see 63,644, all right? 64,899. So 64,899 was the actual high that we've seen so far. That occurred on April 14th at 2 o'clock in the morning. The big news happened right over here, where we see, again, now we're April 17th, just 3 days later. April 17th, 11 p.m., April 17th, 11:30. So between 11 and 11:30, we dropped a good 7,000 points in Bitcoin in a matter of minutes. And I can tell you that actually timed out very well with the news report that came out about the government going out and starting to target and investigate illicit activity around cryptocurrency. That was the big move, right? The bigger target that we have to concern ourselves with, and I think this is the big one, and I've heard some folks that were chatting that said, the government's going to ban Bitcoin. They're going to create their own digital currency. Okay. There's a possibility that could happen. Okay? There's a possibility that could happen. I have another idea myself. So let me throw a couple things out to those of you as we look at this chart here, this real-time chart. And what I'm going to do is I'm just going to leave this up right here for now as we discuss this. All right, 55,297. It's all over the place. Down 785 in the last what is that? Week? 24 hours? 24 hours. Let's go to the 1 hour chart. Okay, so down 0.5 in the last hour. Last 24 hours, down 0.53. But the last week, we're down 8% on Bitcoin, looking at where we were just a week ago to where we are now. Okay, let's talk about some ideas. Some of you have some very good comments. I mean, all my, majority, not everybody. Not everybody, all right? These guys that are out there throwing their WhatsApp phone numbers in here to try to elicit cryptocurrency from my group, shame on you. Shame on you. I know what you're doing. And a lot of other people in here know that too. And are smart enough to know better than to go in and think that you're going to manage their Bitcoin. Folks, nobody can manage your Bitcoin better than you. All right, I'd say that right now. Now, that being said, let's talk about some price levels here. 51,000 is a very interesting level. I'm going to share that with everybody in the room in just a few minutes. But here's what I want to talk about. Let's talk about some fundamentals and what's going on with Bitcoin and what's going on in the crypto world itself. So what I see is, and I hate seeing the drop that I had too. Guys, the drop I had in crypto could have bought a nice size house. You know, what I saw happen over the weekend in my Coinbase account, yeah, could have been a nice house. But anyway, it was many houses on the way up, so I can't complain. But here's what we look at. On one coin, you got folks saying that the government's going to ban cryptocurrency and it's going to drop 80%. All right, well, you know what? We did get an 80% drop from after the 2014 highs. We did get an 80% drop after 2017 highs. What's to say we don't get another 80% drop afterwards? You have to factor this in if you want to be a long-term investor in cryptocurrency and altcoin. But let me share this with you. This is another thought that I got in my mind, is that, first of all, the Fed has printed 7 times more U.S. dollars last year than what Bitcoin's market cap is right now. 7 times more just in the last year. Here's the other thing. This is my thought. Call this my conspiracy theory. Think about this. If the government is really looking at BTC as an asset, then they know that if Bitcoin were to go to $1,000, all right, 500,000, excuse me, a $200,000, $300,000, $500,000 per coin, they've got themselves a really nice asset to tax on right here. Every time you sell Bitcoin, even if you transfer it into another cryptocurrency, or you buy a Tesla with it, or you buy a house with it, you're basically taking it and turning it into cash. That becomes a very lucrative opportunity for the U.S. Treasury. If Bitcoin got to a $20 trillion asset, it would be a treasure trove for the U.S. government, because if they decide that it becomes taxed, and it becomes taxed at short-term capital gains, for instance, then the average person would be stuck with a 40% tax charge. What's 40% of 20 trillion right now? It's a lot of trillion. It's $8 trillion that could work wonders for infrastructure, for clean energy, for paying back some of the, I can't even say it without laughing, paying back some of the debt. Can you believe the government would actually do that? But what I'm doing, folks, is I'm just saying to you that there is a lot of reason why maybe the government isn't so quick to ban it, because they see such a huge treasure trove of taxable capital coming in. All right, that's what I'm thinking. And you know, maybe you might be like me, saying, "Well, I'm just going to hold it forever." Haven't we all heard the whispers of taxing unrealized gains? And let me tell you something: the government might have a tough time trying to figure out what's an unrealized gain and what's not. And there might be a big blow off of folks that are saying, well, I've had stock for some time, and they may create some exemptions. Do you think for a minute that they'd create an exemption with Bitcoin? I don't think so. I think if they saw that and they see that big asset and they're thinking, how do we knock Bitcoin off its block, all while being able to maximize return? Tax it. That's my thought. That's my thought right there. Okay, so the other thing I want to mention is, I want to say this too, and we're going to get into this. Ethereum, in my mind, is the real gem. Okay, let's get to it. So let's look at these charts other than look at this thing move back and forth by $500 a second. Cryptocurrency charts. So this is where I want to go. Again, and let me mention this. So those of you that are joining the live stream, I want to welcome all of you that are here. We do this every week at noon, every Monday at noon. I'd love to stay on here all day long with you, but I don't have that kind of time, guys. I really don't. I put an hour, when I do this together. I'm going to spend a little more time with you today, though, because I'm not done yet. But I can't do this all day. And to me, I don't want to waste your time just sitting here looking at what we just looked at the last 5 minutes. Now, I felt that the conversation we had was fantastic, but I'm not going to sit there and go, oh, it's going up. Oh, it's going down. Oh, to the moon. I don't want to do that. There's plenty of other people out there to do that. That's not me. I want to show you how we spot opportunities and look at real buying points in Bitcoin stocks, cryptocurrency, and everything. So now we're looking at a chart of Bitcoin. And what I want to share with you is what's really been happening with it. And you can see here, this is a 100-day chart because it includes the weekends, it includes the holidays, and it also shows me that last move we had, there was a 38% pullback off the highs that occurred earlier this year. Remember when we turned into the holidays, we turned into the new year, and we were seeing new all-time highs in Bitcoin. And we got the pullback, that 38% pullback that pulled us down to 30,423.10. From there, we made a mad dash up, and we actually started a new series of higher lows and higher highs, okay? Count them with me. 1, 2, 3. All right, now, if you're an Elliott Wave trader, an Elliott Wave is something that I don't have on here. And it's not that I don't like Elliott Wave. I like Elliott Wave. The problem with Elliott Wave is it's very subjective. The counts, the numbers are always changing. And you hear these Elliott Wave guys that are out there going, okay, the top is in. They said it with Bitcoin when it was in the 50s. Okay, the top is in. They said it again when it approached 60,000. The top is in. They keep saying the top is in, the top is in. And yet it keeps going higher. And they've been saying that with the S&P for a year now, right? I got on board. I was short the S&P last year. I was bearish the S&P. This time last year, I was bearish the S&P. Dropped 6 figures before I finally realized we're not going lower. Don't fight the Fed. And I flipped the script, right? So when you look at Bitcoin and you see this, we want to see something important happen. We want to see the 38% level get breached. We want to see a pullback, and then we want to see a drop down into below the 50% level. That's when we believe that this area has been breached. But until then, I've got some buy opportunities and some buy zones here. The buy zones we see, 50,900 is the 38% retracement level for Bitcoin. The 50% is at 46,990. The 61% is at 43,080. That's based on what? Based on the last 100 days off of the last area we saw 1, 2, 3 support. Right now what we got is we might get a double support here at this level, but we definitely blew through the support that happened a few weeks ago. That's gone. So double support could be at 50,900. All right, so there's your double support. Nice. All right, so that's Bitcoin. Now let's take a look at, Cecil said it, and a lot of you said it too, and so I got to bring it up, and that is Ethereum. Ethereum is the other big one, all right? Now, to do that, let's go over here and let's move on down, and let's look at ETH. So ETH is popping up on the screen, and look at what ETH did, which I found very interesting. Now, ETH has moved more as a percentage than Bitcoin. It moved more as a percentage on the way up, and it took the lead, and the last 4 days, we've just dropped off of 2,500. And so I want to share with you what areas that we see are buying opportunities according to that dead Italian mathematician, Fibonacci. So Fibonacci says that the first area of support, and we came real close to it yesterday, was 1956.67. Next area, 1783, and then the 61% retracement comes in at 1610. I'm going to leave those up on the screen for a moment. So the idea that I see that Ethereum is moving a lot lower, a lot faster, well, guess what? It took off big time as we jumped above 2,000 and 2,100 and skyrocketed to up above 2,500 before pulling back. I think really, Bitcoin is the foundational coin, but Ethereum really adds so much value to the network, adds so much value to the community. Many, many, many of the coins that are being minted in different areas are all based on the ERC25 coin. And of course, we've got the new 2.0 coming up soon. All right, that's coming out as well. We see DeFi coming. This is all based on Ethereum. So I think Ethereum just has such a larger piece. And if I knew I wasn't going to get taxed on my Bitcoin, I would have rolled Bitcoin into Ethereum. Okay, that's what I'm looking at there. All right. So there are a lot of comments that are coming out on what's going on with cryptocurrency. I see some of the folks on here now. I see a lot of you guys asking about Doji. You know what? Let's take a look at Doji. We'll take a look at Doji. And you know what we need to take a look at? Dale, you're bringing it up. Bitcoin Cash. Let's look at Bitcoin Cash. Let's look at Ethereum Classic as well. So we will look at Doji. If I got it in here. I've never looked, guys. I've never traded Doji before. Did I miss the Doji boat last week? Yep. My brother-in-law didn't. He's been yapping about it since over a week now. And the higher it goes, the more he goes like this. I can't go into a room without hearing him talk about Doji. So we got to look at Dogecoin. We'll look at it. But I just want to take a look and see what everyone's. So Eric says something about the greedy DEX traders that took the longs got liquidated, and so we saw 50 billion gone. Yeah, I mean that's going to happen. All right, but you take a look at some of the folks out there that are holding the majority of coin. And you know what I'm going to do next week with you guys? Next week I'm going to come in and I'm going to show you how you can find the wallet addresses and who's holding the most when it comes to Bitcoin, Ethereum, and Doge. All right, I'm going to show you where I go to look at this information. So we're going to do a deep dive next week into researching wallets, researching addresses, and really looking at some interesting timing with things that go up versus things that are going down in the world of cryptocurrency. I think that might be a lot of fun that you guys can look at this on the research side. This is what my research team is showing me, so I'm going to share that with you here next Monday. Guys, as we move into, and let's look at a couple more coins. Let's take a look at Ethereum Classic. That's ETC. So Ethereum Classic is actually holding up much stronger. I mean, you're talking about something that, take a look here. So Ethereum Classic 100 days ago was trading down here at $6.90, went to $39.71. And yesterday was sitting at $39.71. It's dropped off a little bit, but still holding very well. I got to show you the one that really came to my attention last night. I'll share that with you in a moment. Let's go take a look at Bitcoin Cash. That's going to be BCH. So BCH, again, this one's dropping a little more like, moving a lot more like Bitcoin, but we're seeing 100 days ago, 378, went to 1106. The buy zone, it actually got hit yesterday at 828.21. The 50% retracement brings it down to 742. All right, so take a look at, now I'm going to share with you two more. I'm going to look at Doge right now if I can find it. All right, now to find it, let me go into all cryptos. And I'm pretty sure we're tracking it because we track it a ton of these things. Let's see. D is for Doge. There it is. All right, here's Dogecoin. Unbelievable, huh? Isn't this something? I mean, I got to tell you, I got this one wrong. I got it wrong. And the thing is that, this is one where if I went in and traded, I'm not going to say I can move it because I don't think I could. I will say that I believe that, kudos to my brother-in-law and his band of merry friends who went in and took the Doge plunge because they're doing really well right now. Even my wife bought some Doge. But in a world where Bitcoin, Ethereum going down, Doge going up, what's going on? Is it possible, you tell me, is it possible that some of these folks that are buying Doge are actually buying it with Bitcoin, so they have to sell out of Bitcoin, they have to sell out of Ethereum to go into Doge? And if that's true, when they sell their Doge, aren't they converting back into Bitcoin or back into Ethereum? Yeah, so some of this could be a transfer, which is putting weight on Bitcoin. But Doge sitting at the top of its chain right now at 38.92. We saw some, those moves, those spikes into the 40s. Yeah, this one could be a $0.50 coin here, within the next 24 hours. Could be $1 by next week with all the excitement that's going on in Doge. I might have to take a look at this one again, but I would need some Fibonacci moves for that to happen. Fib moves right now. Let's just look at 38 and 50. All right, just under 20 cent, just under 25 on the 38, just under 20 on the 50% retracement level, according to where we stand exactly at this moment for Doge. For those of you that took that Doge plunge, hey, congrats. The best thing I can tell you is if you're in it, start, obviously you don't go broke taking a profit. So I'll leave it at that. And again, congrats to all of you. And Kathy, you're right. Doge is the GameStop of crypto. And what I understand, and let me know if I'm wrong, because I don't just get out there and just hang out in the Reddit community, okay? But for any of you that do, can you tell me whether Reddit has banned talk of Doge and talk of crypto? Had they banned that from the Reddit community? Because I heard that they did, but I don't know. All right. And Michael, you're right. Doge has been mentioned by Elon Musk. Elon Musk, I think Cuban might be talking about it too. And so there is an interesting tie between the time that a bunch of Doge was purchased and the time very shortly after when the Musk Twitter went out. Interesting. That's all I'm going to say. But I'm going to show you how you can spot those next week. We'll look at those addresses. Guys, I still got to talk about Double Finder. Before I do, if you've just joined me, what we did, and you'll see this on the recording that's going to come out a little bit later this afternoon, we did a deep dive into Fibonacci using stocks, bonds, currencies, commodities, and cryptocurrency with coins like Bitcoin, Ethereum. We went into Bitcoin Cash, we went into Ethereum Classic. We're looking at Doge right now. I want to show you one of the coins that I like that we talked about in other groups, and it was holding up well last night. I haven't looked at it today, so I might be shocked. I might be not shocked. We're going to see what that is right now. Before I look at that, if you're just joining me and you find this information on this channel worth your time, because guys, I know there are a lot of live streams you can go out and look at. Let me tell you what we don't do here. We don't hope. We don't think something's going to go up. We don't, we're not using fear, greed, etc. I'm showing you how we look at rules-based trading. Rules-based trading, very simply looking at, for instance, buy zones with Fibonacci's. But we also look at rules-based trading in many other different ways, through seasonal, through technical, through fundamental opportunities. And so I share a little bit of that each week with our live trade community. If you like what you see, please like this stream. Hit the like button below. It really helps support the channel. And it brings a lot of the fear-based community over to see that there is another way to look at the markets as a rules-based trader. Back testing, looking at what works out there, looking at spotting repeatable patterns in the marketplace. All right. Okay. My favorite coin. I don't know if I want to say it's my favorite, but it's been one of my favorite here recently. And I do have a position in this coin, so I'm going to put that out there too. But take a look at, let me put Coinbase back up because it gives me a lot less coins to look at. YFI, Yearn Finance. Oh yeah, it took a little dip today, but yesterday, while Bitcoin was dropping, it was actually doing quite well. All right, so Yearn Finance made the bounce off of the 38% retracement level, which is down below 45. So it hit it even this morning. It went above and made new highs. Went all the way up to the high 50s before pulling back. We have the closing high at 53,456.90. So we're looking at the last 100 days with Yearn Finance. And Yearn Finance shows the 38% retracement at around the 44,1279 level. Then we've got 40,571, 37,530. That's your 50%, 61% retracements. I like this if we were to pull back again in that area between 40,500 and about 44,500. Those are the areas of the buy zone that I like on Yearn Finance. who knows? We might get past this concern of the government going in and starting to look for illicit transactions and illicit activity surrounding cryptocurrency. All right. So there we go. All right. So let's talk about doubles. How do you grab doubles in this environment? All right. So grabbing doubles in this environment. You can do it with cryptocurrency. We see it right here. If you take a look at what happened with Doge, Doge had more than a double. I think it was about a 500% move just in the last week, maybe even more. All right, but how do we find doubles in the stock market? Well, it's easy. What we do is we go out and we look at something which is called the percent to double tool. A percent to double tool gives us an idea of what an option needs to, or what the stock needs to do for an option to double in value. Right? So I ran my percent to double tool. I call it the call and put double finder. And I ran that this morning and I actually ran it on my stock list. And so my stock list, if you remember, was the biggies. All right, the biggies were looking at the S&P, looking at the bond market, looking at the currency market, looking at the commodity market. All right, and then we also looked at Fang stocks. So let's say we're looking at Fang stocks right now, and we want to find out which Fang stock has the best chance of a double based on the smallest move in that stock. Here's what I'm going to do. So I'm going to go up, and I'm going to go into my lists, and I'm going to edit a list. And I'm going to let it edit what's called my stock list. So my stock list, what I'm going to do is I'm only going to have 6 symbols in it. And that is Facebook, Apple, Amazon, Netflix, Alphabet, and Tesla Motors. Now, I saved that list. I'm going to now go over to my searchers. And I've got a ton of searchers in here. But I just want to go to the one called Double Finder. And what Double Finder is going to do is it's going to go out there and I'm going to say, give me the lowest percent of double calls. What that means, again, is that I'm looking for these Fang stocks. I want to see the Fang stock that has the least amount of movement that's going to double my call option, double that near money call option, the quickest. So if I do that and I click on search, watch this. Not even a second. That's how fast this happens. All right, so you're going to see more than one ranking. So when I see Google, I see that Google right now, and I've got the ability to look at the chart. I can have a quick pick of Google. I can look at Google's news. But over here, the price of this call option on Google is $99.35. That's outrageous. Don't worry, we're going to see some that are cheaper. But this right here tells me that we need it looks like a 7.8% move in order for that to double in value. And you're saying to yourself, wow, I mean, what's the probability to exceed that percent to double? Well, a little less than 18%. There's an 18% chance that we're going to better than double that number. Probability-wise. That means, guess what? There's an 80% chance that that's not going to happen. But we are coming into earnings, which is why some of these are so expensive. All right. Now, we're looking at the June 18 options, too. So look at Apple for a moment. All right. Apple's number 4 on this list. And it shows me that the June 18 135 call is selling for just under $6. And it's telling me that it has an 8.66% chance to double in value. Now, some of you might be saying, well, Tom, I mean, these are June options. These are options that have better than 60 days to expiration. Can you show me something that's shorter term? And the answer is yes, I can. Here's how I'm going to do that. I'm going to go in and I'm going to look at my criteria. And I'm going to go in and I'm going to look at the days to expiration. Let's put those in at, let's say, 5 days to 45 days. Let's look at a shorter move, a shorter area in terms of expiration. Let's see what that pops up for us. All right. Now we're looking at some stuff that actually happens in May. So even May, those Google options, remember the ones that expired in June, were trading in the $99 range? The May, which are a month earlier, still trading for $80. But their percent to double goes down to basically says if Google makes a 5.48% move, this option is expected to double in value. Can Google move 5.5% after its earnings announcement? Yeah, absolutely you could do that. It absolutely could do that. Now, just as much as it could do that, it might not do that either. But I'm showing you ways we can go in and look at doubles. Now, this is where I want to bring you into the conversation. I will do my best to grab stocks as much as I can to look at this information, but it's going to take a couple seconds for each stock. So, for those of you that are interested in me looking at a percent to double to show you what option has the best percentage to double on your favorite stock, tell me right now what stock you'd like me to look at. And I will put it into the search symbol. Oh, you know what I'll do? I'll do one even better. I'm actually going to I'll go into my lists and I'll just put all your stocks in and we'll see who has the best. All right, it has to be a stock. Has to be an optional stock. That's the only thing that I got to do here. So we're going to go in. I'm going to clear the board. You give me your stock prices. You may begin. PLTR. There it goes. PLTR. What else? MRO. What else? Ford. Is that F? Okay. NEO. There we go. Who else? Apple. AAPL. We just did it, but I'll do it again. LTHM. SPY. QQQ. I didn't put an M in there in LTHM, so let me put the M in there too. All right, what else do we got here? AMD, Tesla, AMD. We did Tesla already. NOK. MRO is in there. Tesla's in there. CG. Plug. Got to do plug. Piton. That's going to be a tough percent to double, but let's put it in there. Apple's in. Coin is not optional right now, so you can't do that one. CCIV, look at them come in. MSFT, I'm going to do 3 more. TLT, Snap, last one. XRP, nope, that's Ripple, doesn't have options. AMAT, okay, done. Stop, please. There we go. Let me go ahead and save that list. That's a bunch. That's 18 stocks I put in, guys. Let's take a look at that. And so I'm going to put in 2 more of my own. I want to see what GameStop's doing. I want to see what Riot is doing. I want to see what AMC is doing. Just to add the what the gamers are doing in there. All right, and the Reddit crowd. Okay, so here we go. So I've got my stock list. It's set up with these 18 stock names. And what we're going to do is we're going to go in and look at these options. See, this is what the guys out there, the other live streamers, don't know. They don't know. They just go, oh, buy call options. Well, how do you know which call option to buy? How do you know what call options you want to avoid? Okay? That's important to know. So here we go. So let's go ahead and take a look and see what we have going on with this. So I'm going to go back to my searchers, and I'm going to go back to, let's go back to Double Finder. By the way, if you want to do this yourself, guys, and you've never used our tools before, down at the bottom below this video, take a look at the description tab. You'll see a link to a 2-week free trial. So you can do this too and much, much more. Tom'sOptionTools.com. There's a link there that only my live stream group, my YouTube channel. If you're on my YouTube channel, you get it. I don't offer this up anywhere else. So here we go. So we're going to go looking at the double finder. I'm just going to look at the lowest percent to double calls. And then what I'm going to do is I'm going to go in and make sure that we're looking at that 5 to 45 day maximum days to options expiration. All right. So there we go. And let's run the search. Are we on my stock list? We're on my stock list. Who's going to be number 1? Is it going to be you? Now, what makes number 1 to me? A number 1 is first of all, it has to be on my buy list. Now, we just took a list of stocks that are out there that all of you want to look at. They may not be on my buy list. Some may not be on my buy list. But what I'll do is that I'll take stocks that are on my buy list and then I rank them to see which ones need just the smallest, tiniest move in order to get a double on those calls. So here we go. TLT. Anyone that said TLT, you only need a 2% move, a 2.15% move in TLT to get a double on the May 21st 142 calls. 141 calls are right behind it. SPY is popping in at number 2, and that is a $6 price for the May 416 calls. But what we're looking at is a 2.38% move in SPY, the underlying asset, for those to theoretically double in value. All right, let's move down and let's look at a stock. SPY. What's the stock? Who mentioned CG? I saw someone saying CG in here. CG is, first of all, it's a $39 stock. All right, the 42 calls out there in May cost 40 cents. In order for that 40 cents to theoretically become 80 cents, we need about a 3.44% move, theoretically, in CG in order for the stock or this particular option to double in value. All right, we see the Qs. There's CG again. Microsoft. Whoever chose Microsoft, that's on the list as well. All right, so again, I see some of you in there. I chose that one. Good for you. Congratulations. Microsoft's in here too. That is the May 21st 260 calls, trading for $6.50. Well, if Microsoft goes up by 4.27%, those call options would theoretically double in value. All right, so this is based again on something that we call the percent to double indicator. Right, so if I were to go in and look at Microsoft, right, so if I go and look at the 650, this is going to actually bring up a chart, an actual scan for me. So what it does is it shows me what the risk is, what the profit potential is, which for a call is unlimited till you get out of it. We look at break even. Break even is it gives us that upside and downside break even. Then it gives me some more information, like for instance, option symbol, the type, what the entry price would be, the implied volatility of these Microsoft calls. And then it also shows me some other things like the options Greeks, the volume, the open interest. All right. And then I'm able to come down and I can look at the actual chart itself, which has been moving higher ever since. And then the risk graph. The worst case scenario for me on these calls, the best case scenario for me on these calls is it moves higher. And then I can actually get into things like implied volatility, which take a look at Microsoft. This is what makes this such a quality pick because the IV, the option premiums are really low as you come into the stock. And then I can go in and I can look at different settings as well as what the implied volatility and probabilities look like on this particular trade. So, Microsoft is actually one of the ones that is on my buy list. Not this option particularly. I'm not involved in the Microsoft May 21st 260 calls, okay? But this one is definitely one that's on my buy list. And so I want to make sure I shared that to you guys, shared that for you guys. All right. So there we go, guys. If I were to kind of give you a synopsis of what we're looking at here, real time stock market still trading off of its lows for today. It's in the red zone right now. Bonds, however, have pulled back. That could be the indicator that stocks might try to do a recovery here as we move forward. We've got stocks like Nvidia, which are down. It's down $21 today. Those are the big ones to the downside. Big ones to the upside. Actually, GME is actually higher by $10 today. That's kind of a non-correlated effect to the overall market. And also, I think Doji being up, that's translating into things like AMC and GME having a positive day in the market. So we have talked about, if you've joined me over the last hour, we've talked about market news. Bitcoin, we've actually talked about the overall markets. We looked at those in terms of fib charts. We looked at Bitcoin, Ethereum, will the fallout continue, my buy levels in the markets, and also finding doubles with call options. Before we take off and finish out the day, guys, I want to mention to all of you who are new, welcome. We do this every week, and we do it at noon, every Monday at noon. And what I'm doing out here is I'm not coming out here and just, throwing up a bunch of stuff, throwing a bunch of darts at a wall and telling you what I think is going to go higher. We look at spotting rules-based opportunities. We look at creating what we call acceptable risk trades. And then we simply plan them from start to finish. And the planning part is where you go into your platform. This is where I'm not your investment advisor. I can't tell you what to do. All right, but I show you how I spot, create, and plan. Again, we'll have a recording on this video coming out a little bit later in the afternoon. But before you go, I have something that I would love for you to do for me. If you found this informative, guys, if you want to see me doing this week after week after week, because I do this to the community, then do me a favor, hit that like button. It really does help the channel out. I know you hear that from me and others, but it really does help our channel out. And it really shows people that there is a channel out there that shows folks how to find and spot rules-based opportunities and trade off those, and not just trade off of fear, off of greed, off of hopium, which is an option Greek that we don't follow. We don't follow hopium. All right, I think it's going up. I know it's going up. I hope it goes up. Oh my gosh, it's going down. That's not part of our definitions here in Tom's Trading Room. So again, guys, I want to thank all of you for those of you who are part of the podcast today. I appreciate all the comments you're giving to me. And again, like I said, we'll have this video up in no time. For those of you that missed part of it, you can see all of my predictions in the overall stock market, in Fang stocks, in about half a dozen cryptocurrencies, as well as what we did here spotting doubles. Thank you guys so much. We'll see you again next week. Till then, have a great rest of your day trading. We'll see you soon. Bye now.